Welcome back, folks. Just a quick little update and a reminder that I am on holiday. So I've been away from YouTube and mentoring and teaching, and just want to stop in and give you an update because I had a small opportunity to do so. So the review on August 1st and August 2nd, I would counsel you to go back and watch those. So it'll give you a little bit more insight as to what I'm pointing to here. So that way it doesn't look like, well, this is after the fact hindsight. This was shown to you beforehand, okay? So the dollar index, I mentioned how obviously, the month of August generally is a sloppy month. It can be a rare event for it to be a very symmetrical market where it gives you nice clean price runs. Most times it's choppy. It'll delay before it starts to move towards obvious levels and or rebalance to a specific price point. So I don't like to do a lot of things in August, but if you focus on the calendar events that are high impact, it pretty much helps you, weed out and ferret out the more problematic conditions or setups, and you won't hopefully fall victim to just being in the wrong time in the wrong market. So I mentioned how we could likely, if we were to run higher, this area here was a little too clean, a small little gap in here. The market stayed pretty much inside this fair value gap here. On the downside, I mentioned the liquidity would be likely right at this low, and if it accelerated, we would go for the sell side here. Pretty much sideways, so not right, not wrong, just, it is what it is. But it's interesting how we drew right down into that low, and I counsel you to go look at the lower time frames, and we went just a little bit below that, and then we're back inside this fair value gap here. Let's go to euro real quick. All right, here is the euro dollar. Let's see if I can make this a little bit better to see. So our focus on this market here, pair and forex, I mentioned this was the old low on the daily, going back a little bit in terms of time, but you'll see that in the old reviews. I liked the area between the old low, which is this blue line, and this candle's high. I like that area, and it could likely go back to that old low. I mentioned that before, but we only saw it go just a little bit past that, but going right specifically to this low here. So I'll take this there, drop it down and show you what we saw in terms of price delivery. Okay, so the market gravitated back to the old low, but the bulk of the volume is between that low and here. You see that here with the bodies? The bodies of the candles predominantly inside this little area, but the wicks go up to and through the old low, but back to this area here. Look at how this candle drops down and comes back up. See that? This is real important. When the market drops down like this and comes off that low and closes there, this is a balanced price range. Okay, it's not an imbalance. Okay, it's not a liquidity void. This is a balanced price range because price has opened here, traded down to that candle's low, and then came off that low right here. So when we pass down through it again here, this can be framed as an imbalance. But this level here is where the balance really takes place. So if we go below that, that makes this a strong candidate for what? Short-term resistance. So the market does what? It reaches back up into that area. So I get a lot of times students will ask me in my private group and even on the YouTube channel in the comment section and on TradingView, or they'll comment in other people's videos and they'll say, but I don't understand how ICT knows when to leave certain fair value gaps or imbalances open. When does the market leave certain parts of the imbalance open? Well, you're getting that here today in one lesson. There's several other factors that go along with it, but the fact that we had this delivery here, because look what we have. We have 1, 2, 3, 4 candles that make up this run here. So this segment here where there's only one single candle, we start the imbalance framework here and end it here. But you have to go a little bit further in behind the scenes and study the analysis of what has happened inside that price run. Has there been any balanced price range or portion of that overall directional move? Was it rebalanced? Okay. Again, I'm not teaching what Chris Laurie will say is a liquidity void when it goes back up into that area. It's rebalanced. That's not rebalanced. That's just redelivered. Rebalance is when price goes down to a level and comes back over top of it again, passes through both directions. Okay. Once it does that and then leaves it, that is a balanced price range. That market price level from here to here. In other words, this candle's closed, this candle's low. That period or section of price action is balanced because it's offered both sides of the marketplace. Then it has left it here. So if you were a fan of my work on baby pips back in 2010, 11, 12, I would show sometimes when I would have charts annotated and I would go back and look at old price moves in my reviews. Well, I would do old reviews on trades I actually took, and I would do that as a market review. And sometimes I would be anchored to a down close candle, and sometimes I would be anchored to an up close candle. This is not an order block. This is a balanced price range. So that's why it's confusing if you look at my old stuff before I actually started going into the concept of divulging into my order block theory, which was really started and released initially to the public, not in my private one-on-one mentoring that was being done in the 90s, but introduced in the Scout Sniper series on this YouTube channel. So that was the public's introductory, soiree into my order block concept. But sometimes when you saw old videos, you would see me anchored to a down close candle, and that would be a point of confliction for some of the students. They would be wondering, okay, what's an order block? Sometimes you had in your old videos, which I don't even make available anymore, because that was all part of a social experiment for me. I wanted to see if I could cultivate the same environment for students to see if they could come to the same conclusion and understanding about the markets that I have had. And I haven't had that. No one's really done that. So because it was presented in that venue, in that way of introducing it to the public, it's not the best for learning. It was more, I was wanting to see if I would get the same laboratory result that the markets and the Lord and everything else that came into my life and the circumstances that created who I am. This is the output. So I tried my best to create those same similar, conditions as best that I could. And I didn't get the result of another ICT or another one out there that would think about markets like me. So anyway, this balanced price range kept price from wanting to go up into this last little portion, because all of this move here, where has the market really have an exposure to only sell side imbalance? In other words, this movement from this low here down to this candle's high, this is all sell side imbalance. So it's really only necessary for a price to go up to that level and not fill in this little area here, because we've had this movement back and forth. So this is all rebalanced. So it's like a brick wall in price. It doesn't need to go up there. And that's why sometimes you'll see folks struggling with, why does he take trades and not expect it to go up into these little areas here? Because I'm privy to understanding how price really rebalances. And it's not just a simple matter of, okay, here's a one-sidedness of price action, and we'll just call that a void. That's not a void. This is a sell-side imbalance, buy-side inefficiency. SIBI is what I call it in short term. SIBI. Sell-side imbalance, buy-side inefficiency. Meaning, in this area here from the close to low, we had price initially drop down, create that low, and then backed off that low and came here and stopped. So we saw both sides. Sell side offered, and then buy side. Back and forth. Price moved back and forth through it. Here, we only had, once this low was broken, we only had sell side offered, and there's an inefficiency in that market delivery for price delivery on the buy side. So in other words, yes, sellers had an opportunity to sell in this because there's a one-sidedness to that one individual candle for that interval, that one daily candle. But that imbalance only offering majority sell side, it was just only focused on repricing lower. The algorithm will seek to offer buy side, which is running back over top of this for the purposes of repricing to that point right there. That's not an order block. That's just a point at which the price will reprice and now offer sell side imbalance, buy side offered. Now it is not rebalanced. That is not rebalancing. This is rebalancing when it leaves it. Now that will act as, there's no reason for it to go back up in this range because it's passed down and up in that same range. From the close of that candle to the low, inside that little price range there, price has moved back and forth. So it's offered opportunity for both sellers and buyers. It's all algorithmic. It's not buying and selling pressure. The market sells off here, so the market's algorithm is repricing and offering continuously lower, lower, lower. Doesn't matter how many people is going in there to buy euro dollar. It's going to keep offering lower prices. It's controlling the sentiment of the market. It's controlling what buyers and sellers are going to do, not your indicator, not your system, not your dead man theory. Okay, it's algorithmic. The market's going to book the way the market wants to book, and it does not matter if it's on high volume or low volume. It's going where it wants to go, regardless of whatever you think it might do and whatever I might think it might do, because there's times where I'm wrong. But generally, I'm probably beating a dead horse now, and we probably want to get on to the next thing. But the point is, I think that this should illustrate the difference between a quote-unquote liquidity void versus a sell-side imbalance, buy-side inefficiency. Okay, that's mine. That's what I've brought to the community, and the understanding of it. That's not found anywhere else. Okay, so let's move on over to ES. We'll go into this one here. And I mentioned on this particular index, we were in here, and on the 2nd of August, I said that I wasn't going to give you any prognostication because I was leaving you. I didn't want to leave something dangling for you to get tripped up, because I already warned you that August is usually very sloppy and it can hurt you. But I drew everyone's attention back to this little area right there, and you're going to learn all about this. This is what I call a volume imbalance. What is that? That sounds kind of cool. Well, it is. It really is cool. This is also one of those points at which it proves the markets are algorithmic, and you won't find it in books. Wyckoff didn't talk about it. Chris Laurie doesn't know about it. Larry Williams never mentioned it. And all the other people out there that you ever hear and learn from, they're never going to hear anything about that before me. I released that in my private mentorship group. It was something I taught one-on-one to people that were trained by me in the late 90s, early 2000. And that was one of the things I kept very guarded. Okay. And there's a lot of other things that time-based charts, which some goobers out there will tell you that you can't trust time-based charts, when I'm proving that that's a fallacy, because time-based charts are very helpful, because the first mode of price delivery is time. The algorithm is operating on time. Okay, so whether you're looking at it from a hourly and minute basis, okay, based on a clock, or calendar, because if you look at a calendar, that's still time. It's just measured over a long interval of days and weeks and months. So the first emphasis behind price delivery and its foundation is time. When should price be moving? Okay, and you can think of it in terms of my kill zone theory, 2 to 5 o'clock in the morning, London time, New York local time, 7 to 10 for New York session for Forex, 8:30 in the morning to 11 for index futures, and 1:30 to 4 o'clock in the PM session for index futures. So if you focus primarily on those 4 intervals or windows in time, you're operating when the algorithm is likely to perform its normal macro. And a macro is a short list of procedures and processes that cause it to do a run in price or rebalance, or reprice. So it's a matter of what you're looking for in the present context of the marketplace and the present narrative. Not trend, not higher high, higher low market structure, because that's infancy as well. There's a lot more things going on that needs to be understood. And unfortunately, my concepts are very, very complex to the neophyte because it goes outside of what they probably read on Baby Pips or other trading websites or seen on other YouTubers. It causes you to have to think, and you have to change your mindset from thinking buy low, sell high, overbought, oversold, trend lines, okay, to where are we at in the present range? Where are we at seasonally? Where is the money being made right now? Who's likely to be taken as a victim? What liquidity is in play right now? What are they reaching for? All those factors then bring in the calendar, the economic calendar. What events for the coming week or month are going to be heavy hitters in terms of medium or high impact news? And by putting all those things together with the concepts I teach, those price action signatures, you get this beautiful tapestry where suddenly it feels like you can predict the future. Now, don't be lulled into thinking you're going to watch these videos and be able to walk out there next week and just kill it and know it's going to do certain things. There's certain times of the month, certain times of the year, certain times of the season, whether it be a spring or fall. The market's likely to do certain things. It doesn't always do it. It's not 100%, but there is a seasonal influence that takes place on all intervals of time. But I shared with you the complexity that is the month of August. It can be generally very choppy, and it can beat you up. And if you're trying to catch sustained price moves, it'll probably beat you up before you see it unfold. And most times traders are too afraid to get back in because they've been slapped around, go through drawdown, and then the moves that would otherwise be expected because of the higher time frame charts, i.e. this daily chart, and then the higher time frame moves that would be derived from higher time frame charts like what we see here, the daily. This is what I gave you on August 1st. Okay, so I don't delete the YouTube videos. I don't, hide it. If I'm right, I'm right. If I'm wrong, I'm wrong. So go back and watch August 1st, and you'll see that right in here. I talk about the market's likely going down in between here, this range here, between this candle's close and this candle's open. Okay, that is a volume imbalance. I don't call it a volume imbalance, but my students in my private mentorship know that that is a volume imbalance. Hold that thought for right now because I know you're thinking, okay, what is a volume imbalance and how do I use it? You're going to learn the PV arrays that I taught my private group because in August 22nd, I will start uploading my premium mentorship core content lessons. So that way, all of you, all around the world, will have that language that I had to create. So that way, my students could understand when I sit in front of a chart and I explain something, why it's likely to go where it's going to go, why am I entering here, why am I putting a stop loss here. You can't understand that until you have the common language that is in many ways required, because I can't lean on something that's existing in retail. And once you see what I've created and share with you, you'll know right away why this is absolutely, completely unique to anything else you're going to see, and why our results are exemplary. They're extraordinary because they are the market. I'm tapping you right in to what the algorithm's doing. And I dare anybody to challenge what I've said in the past and then look at your charts and see it's right here. It's happening right here in front of all of you. Well, August 1st, I mentioned that this area here, you can go down into about midpoint that range or go down into this particular candle's close right there. We see it trade down into it on the 2nd of August, and then the next day, I've left you now. I've not promised to come back until later in the month, on the 22nd of August. So the market trades down into this area. Next day, we have a nice run up. Last down close candle in that range, that's your order block. The market dips back down into this old high of the fair value gap. Finds some support there. Trades into the order block again. Once more here, rallies aggressive. and trades into the area right here, which I mentioned was going to be the first objective. Once we went into this area here, it would go here. And then I said that it was likely to go up into here. What's it gravitating towards? That liquidity right there. Okay. This is all bias. So how many down days did we have from the time I gave you on August 1st saying that we would likely see this move drop down and then run for here and here? Let's count them. The very next day on the 2nd of August, we had a down day. That's one. Next day here is a bullish day. Indecisive day, down day, down day, down day. How many days is that against the bias I gave you on August 1st? Multiple, right? Now, do you understand why I don't like August? It can be very choppy. And this is the type of movement that if you're impatient and you're trying to push really hard because you want this to work for you, you want to leave your job, you want to make ends meet when you don't really have the skill set yet, nobody should be doing funded account challenges in the month of August. And I hate to break it to you, and some of you didn't want to listen to that, and some of you are paying the price. I have other students that have done very, very well, and I've opened up dialogue on Twitter asking basically one individual, but apparently there's a large number of you. If you have done these funded accounts and you have been taking money out of the marketplace with what you've learned from this YouTube channel, or if you're a student of mine through my private group and you've done that funded challenge and you have taken money from that account in real money terms, not like demo, not the evaluation phase, if you're really making ends meet and you're getting money out of that, I would absolutely love to talk with you. And I'd like to do about like 30-minute intervals, and I think the community would love to see that too. But it's just a potential series I want to do, and it's really not meant to promise everyone's going to be able to do that, but I think it would be inspiring to other viewers like you to see that there are people that started just like you did. Okay, maybe you had doubts, maybe you were believing other people saying, I'm a scammer, I'm a fraud, I'm this, I'm that. I'm giving it to you for free. That's all I'm doing, is showing you that this is real, and I have no problem whatsoever proving it because I know it's real. I lived it. This is my life, folks. So if I tell you this is what is likely to happen, the month of August is likely to be choppy. And if it's choppy, is it high probability? No. But even with the choppiness here, going to the economic calendar, looking for high impact or medium impact, specifically high impact, if you focus on those days and you understand what the higher time frame order flow is doing, it's going higher. We were outlining that to go here and then here. See it drawing up to that level? That's bias. Where are the big days? Where's the big range candles? Are they black or green? Are they down close or are they up close? Up close, indecisive, small little whipsaw days with down close. You see that? That's all chop. That's synonymous with August trading. That's called summer doldrums. There's lots of folks out there on YouTube that are trying to make it out as a live streamer, and there's a few of them I'm supporting. I'm cheering them on. I think that they have a lot of guts, a lot of moxie to be out there doing that. And it's unfortunate to watch them get frustrated because they're trying to do something in markets that are not likely to do what you want them to do. That's what 3 decades of experience has brought me. I know where things are likely to cause me to go into a tailspin. And that gives me longevity. It gives me wisdom that the average person just simply doesn't know because they haven't been doing it long enough. They haven't lost enough money to learn those types of lessons. And that's why I teach the way I teach, because I want you to understand that there's validity behind the things I'm teaching you. I've shown it with live accounts. I've done it with demo for a decade. And I have hundreds of thousands of students that can verify and vouch for the fact that I've called it, I've explained it, I've traded it, I did it live, I've done it in all types of markets. And one of the most important things and characteristics as a mentor that differentiates me from most, if not everyone else, is I know when not to be doing something. And that also proves the understanding of the algorithm. Because I know what's likely to occur: seasonality, time of day, day of week, day of month. That stuff I keep private. And by the minute. Again, that I keep private. Taking all that aside, And I know some of you get mad when I say that, oh, you like to bring that up all the time. Why do you keep doing? Because I'm emphasizing that these markets are algorithmic. They don't operate on Elliott wave or harmonic. That's just randomness. You're going in looking for that. The market is not looking at harmonic. The market's not looking at Fibonacci this and Fibonacci that. It's not looking at supply and demand. It's not buying and selling pressure. These things are going where the market has an inefficiency. Price will redeliver back to that, or it's going to move to where orders would be resting in form of liquidity. It cannot see your order, period. It knows based on previous movements and ranges and open, high, low, and close, which is why I say all the time, the open, high, low, and close is all you need. You don't need indicators. You don't need those things, because that is going to whip and torture the data, which is the open, high, low, and close. You can make it say anything in hindsight, but it's unbelievably impossible to be consistent looking at indicators that continuously give you precision. You're creating a religion-based trading model because you're holding to the idea that these indicators are going to tell you something that's logical, when the only thing it's done is take data that has already happened and been provided to the marketplace in the form of the open, high, low, and close, and it's torturing it and feeding it into some mathematic formula to spit out some kind of cumulative line or some kind of projection based on math. And none of that is what makes these markets book, where they book and how they book, period. I don't care who you are. I don't care if you worked on the floor. I have floor traders in my group saying, this is unbelievable information. How did you come across this? Hello. I got investment bankers in my group. This is unbelievable. And then they see it over and over and over again, and they're convinced. Folks, it's fun for me to be doing this. It's extremely entertaining. Plus, it's fulfilling because I know you're learning the real intricate components to how these markets really trade, how they really book price. And it's consistent. Is it unfolding like I outlined? Is your chart similar to this one? Was I on the tightrope walking with you the first day of August before I left you all? And put it out there, here's what we're looking for. And here it is. You don't want to be trading every single day in August. In fact, you probably should, like I told you all, just simply take a vacation. Don't trade. I know it's hard. It's impulsive for you as a new trader to want to be doing something. But understand, doing something in August is doing nothing. The act of doing nothing. You're doing something. You're practicing stillness. Being still. And that's a winning trade all the time. I have, unfortunately, witnessed a few people scrolling through Twitter and the regret. I wish I would have listened. See, that's the type of thing I'm trying to avoid. I'm not an exciting mentor. I'm not going to go out here and do backflips at local parks. Okay? I'm not going to be out here, showing you everything in my personal life just to make you feel like I'm a hero. I'm going to bore the living daylights out of you. Exactly how your market trading model should be for you. Boring. That's the goal. You want it boring. And then when you make money, then you go and do the exciting things with that, however your heart desires. I'm not promising you that. I'm promising you that I'm going to teach you exactly how these markets book. It's going to be a level of precision that is unrivaled. There is nothing out there like this. There is nothing that's going to ever come close to this, because this is the market. You can't get better than here's the high, here's the low, and it trades to it exactly and stops, turns around and goes the other direction. Math-based indicators are not going to consistently deliver that. Algorithmic principles and theory and understanding about how these markets book. When I say how they book, when they print these candles and they offer the high and the low at every interval, that's absolutely controlled at all times. Do you honestly believe that these markets and those individuals that are in control of them are going to let us, the public, the enormous potential, if it was really our buying and selling pressure, we could crash these markets or send them to the moon at any given time. Isn't it interesting that it never really happens? Again, think about the group that was on Reddit. They were going to take control of the markets. They were going to beat up the billionaire hedge funds. Folks, you can't beat this game like that. You have to look at who is the victim right now. And unfortunately, you either have to be part of that hunting pack that goes and attacks the herd and targets its weakest member and devour it so you can eat and survive, or you're part of the herd. So which is it? Are you the one with the teeth? Or are you the one with the bite marks? That's what this is all about. You are liquidity, or you're hunting that liquidity. That's the way it is. It's predator and prey. And many times, new traders don't see it that way. They see it as lottery, or it's easy because it's an indicator thing. It just tells you when to buy and when to sell. And you don't see that panning out. You see people blowing accounts. You see people hopping and jumping around to different systems, different educators, different mentors. You have to go to a source that's able to show it to you with great detail in 4K resolution. You're seeing it right here. No plan B. No, well, it didn't work this time, but trust me still. It either works or it doesn't. And I leave that up to you as the viewer. If what I'm showing you works, and I'm quite confident you see that it works, don't be discouraged because you know that I can show it to you and you can't replicate it in your own trading yet. That's a normal thing for someone that's just starting in this. Again, you're dabbling with the most difficult thing to learn. It's highly technical and it's a mirror. It's going to show a lot of things about you as a trader that you don't want to see. You want to ignore it. They're character flaws. And 90% of failure stems from that very aspect of trading. These markets will show you where you are weak. And you don't want to identify that weakness to overcome it. You want to pretend it doesn't exist and just keep putting more money in there and hope it's going to give you a different result. And guess what? That's the definition of insanity. Doing the same thing over and over again, expecting a different result. So, let's take a quick look at NASDAQ and wrap this one up. NASDAQ here. All right, similar fashion. NASDAQ's a little bit ahead of the game here. We're just about running its relative equal highs comparably here. And we'll probably see that probably on Sunday's opening. I'll probably open up above that and we'll see what we get after that. But once it gets to these levels, like on NASDAQ here and even the S&P, as I mentioned on its daily chart for coming here, once it goes here, do I have an immediate idea what it's going to do next? No. I sit still and I take in what the market's likely to do. And I study it. Does it want to continue? Does it want to reverse? Will it likely consolidate and stay sideways? That's one of those things that traders think that there's always something to do right away, the opposite. Okay, it's been going up. It went to where we thought it was going to go. Now it's time to sell short. No, it does not mean that. It does not mean that at all. See, your expectations are misaligned because you hear and you see people claim to be able to do things that they really can't do. I'm not claiming I'm going to know what the market's going to do once it gets here. I just need to know that that's what's going to likely happen. Right now, the current time, on a daily chart, is this a 1-minute chart? Is this a scalp? Is this day trading? No, this is a higher time frame analysis. So if you are a swing trader or a short-term trader, you could be utilizing these things for setups. You don't need to be in a 1-minute chart scalping. And you can get funded accounts and make money and make ends meet following a higher time frame order flow strategy. Not even mine. If you can read a daily chart, you can read a 1-minute chart because it's the same thing. Price is fractal. So everything I'm showing you here, if I would have hid the fact that this is a daily chart and what this market was, and I said, okay, study this chart here and I miscalled it on purpose and referred to it as a 1-minute chart. None of you would really have a hard time with just taking my word on the fact that whatever I call this chart, whatever time frame I call it, you're just going to look at the signatures I've been teaching you. And that's great, because you're not looking at a specific favorite time frame. I get a lot of questions from new students or new members in the community that we're building here on YouTube. And thank you very, very much. I just noticed this morning, I mentioned on Twitter, I have 305,000 new students here. And I am absolutely blown away with the interest. You know, I kind of figured we would grow, but like I thought by the end of the year I'd have like 300,000, and it just keeps growing faster and faster. I'm very, very pleased. I'm humbled and honored to be your mentor, and it excites me to know that this is a community that's growing and it's catching fire, and I love it. And for those that you like to share my content, links, and talk about the channel and bring other people here, I thank you for that. I appreciate that, and you're going to be helping other people out there save a lot of money and frustration by doing so. So anyway, the NASDAQ, we're real close to hitting that order block here. We drop down into it here. Now see, here's one of those times where it says, well, this is just old support resistance. No, there's going to be lots of times you're going to see me talk about certain setups that it doesn't come back to that old high like it does here. Sometimes it'll come just to about right here and then create that type of run. And you're like, well, it didn't go down there. And that's when the detractors that like to say the things I'm teaching you, are simply rooted on retail logic. They don't have anything to say then. But I've taught there are times when the market will go back to these levels here. Why might we expect it to be a factor if it trades down to that here? What would make that a significant price level for it to what? Offer support? Well, look at it. Low, high, lower low. This is my bullish breaker. And that's why you get a reaction there. So all these things I teach, it helps you find where real support resistance is. And it's not always going to be your favorite book about technical analysis or your favorite teacher or educator and their idea of support resistance. And I'm not trying to claim to be the best educator. I'm not the best educator. I've learned over time to teach better, because I certainly believe I do teach better than I first started. But I don't think I'm that good of a teacher. I'm a practical realist. Okay, I just know that I'm not the best educator. I'm not the best teacher. I do believe I have the best concepts because it's more closely related to how price is likely to deliver and book and print on your charts than any other logic out there. Everything else out there is kind of like guessing. And there are certain times where certain things get in alignment where it's not a guess here. It's not infallible. I'm not infallible. But it's such a degree of probability that is in favor of it panning out versus it's so unlikely that it's going to fail. That's how I frame high probability. And that doesn't make sense to someone that's a new student or a casual viewer. Like, that's ambiguous. Like, how do I take that information and plug it into something that's tangible? I can measure it and see it. Well, that's up to you to go through the charts and the things I'm teaching, because if it doesn't hold up, then you found your answer. Move along and go chase something else. But for the individuals that literally go in and put the time into back testing and studying old price moves and the things I teach take place, and look at what I'm doing beforehand. I'm giving you analysis. I'm calling where the market's going to go, why it should do it. That's the important thing. I'm not just throwing a dart saying, well, it's going up. Well, it's going up, so it's probably going to go up that old high over here just simply because, that's just common knowledge and common sense. I'm giving you the framework why it should go down into these areas here, reaccumulate to go higher. There's the difference between that. It's not me simply giving you plan A, plan B. I'm telling you where I think it's going to go. I'm telling you why it should do it. I'm telling you how the market will book. And then in between all these reference points, from getting into this area here where there's a volume imbalance, from that buy to going above here, you're framing your day trades and short-term trades with that bias in mind. Again, how many down days do we have? We have 1, 2, 3, 4 down days, 5 down days. But what is the ranges in terms of the greatest magnitude? Are they up days or down days? Big up day. Continuation, stall, big up day, and then big up day. So the major range expansions are occurring in what? Inside the bullish bias that I've given you for free. I've taught you the logic as to why my bullish bias was even considered. And you're watching it unfold. This is just one more incident of what's been going on for decades. This is what's been going on in my private group for years. And now I'm sharing it with you. I'm showing you all that the folks that are going to try to do their best, they're going to do their best, especially once they see what I'm giving away starting on August 22nd. There's going to be a lot more hatred towards me, a lot more trolls, a lot more misinformation, a lot more lies made about things that never took place. They take things, they twist it up, and they try to make some kind of narrative for you to not like or trust me. They want to incite a cancel culture movement against good old ICT. But I want you to remember something in closing. I purposely, no one shut me down, I purposely left multi-million-dollar income for teaching. I laid that down to come right here to talk to you for free. Do you have to sit through a couple ads sometimes that are not that much in terms of time? Yeah, I think that's not asking too much. Did you pay for it? No. Am I consistently delivering content? Yes. Am I proving that it works? Yes. Have I shown you a live account? Yes. Am I still showing you consistency and precision? Yes. I'm not selling you something. There is not going to be another paid mentorship group. You cannot expect me to give you something where you're going to pay me, I'm going to teach you. Like that doesn't exist. I'm done with that. I don't need anyone's money. I love doing this. So when you see all these people out there talk all this nonsense, oh, I can beat him in a competition, I'm waiting. So just measure all that stuff with the reality that I'm sharing with you. Okay? Because the world's about to get really, really hard. And for some, scary. And it's going to make them act irrationally. And they're going to lash out. And for the individuals that were in my private group that were taking my information and selling it and repackaging it, making their own little mentorship and parroting what I would say, so it sounds like they're smart, when the suckers and victims that they sold to, who don't know me, they think that they're smart, that they created the concepts and the logic and the methodology behind all this that I teach you. When it's me, I'm the source of that. And the reason why I'm doing it for free, because I'm removing that market for frauds that have taken my life's work, the things that I had suffered and endured and been blessed to receive, and with a promise that I would continuously teach. So I'm pouring myself out. I'm doing that for your benefit. I could be making millions of dollars every single month, all over again, for in perpetuity. Like it could just simply go on as much as I want to do it. Ask any of these 20-year-olds if they would stop trying to collect their money for their teachings and their mentorship. Never happen. Because they're not really affluent. They're really not wealthy. They really don't have the faith that what they can do in the markets are consistent enough to keep them doing what they're doing. So who do you really want to learn from? Someone that says, I can make lots of money, making millions really, off of just talking like I'm talking to you right here, doing the same thing you've watched me do here, and people would still pay. I could put a PayPal link up right in the comment section of this video, and it would be assaulted with people piling in. If I said, look, I'm going to do another mentorship. I'm not. Why is it so hard for you to believe that? I'm not doing it. I don't need to. And honestly, isn't it better like this? Doesn't it feel good to simply sit down with someone that loves doing this, and I'm passionate about your success? I want you to do well. I really want you to do well. Nothing would bring me more pleasure than to know that you carve out this skill set for you and you learn it well and you can pass it on to your children. That's wonderful. And I've been talking about in the End series, which will continue the week of August 22nd, that Friday. Episode 3 will be there. And the following Friday will be the last one in the series. But I've been talking about how you don't need to trade with live money and still come up with a business income, multiple streams of business income, if you learn this skill set of reading the price charts. Reading price charts is not trading. But there is a huge market for people out there that are looking for someone that can just do it well. And they can learn from somebody to see what it's likely to do before it happens. If you develop this skill set, which I'm teaching you for free, I'm giving you an ATM with the PIN code, with unlimited profit potential. Not without risk. You're going to lose money. But you have the potential to carve this into an enterprise. And who's going to stop you? You. That's all. Just you. But that you that you stare at in the mirror, that's a formidable adversary. That person you think that isn't good enough to trade and make money right now, that person is a titan standing in your way, causing you to doubt yourself. You got to make friends with that person in the mirror. Forgive the person in the mirror for not knowing everything right now, or as fast as you want them to know everything. You don't need to know everything. You just need to know the model that you're looking for, and you won't know that until you start going into the price action. And when you start seeing and studying the paid content, core lessons that my private membership got, all 12 months, that's what I'm giving away for free. Because once you have that, you'll understand more when I talk about things in these lectures. It'll be more meaningful to you. It's important for you not to rush through it. Don't rush. Don't try to go to the next video real quick. Take your time. Every one of my paid group students that failed, they were the ones that rushed. They went through countless videos in one day. Don't do that. You can't retain all of it. You're going to see that there's going to be things in these lectures and lessons that's going to require you to go into the charts. If you go right into the next video, did you really learn? Did you really do what I've taught you to do in the previous video? No, you didn't. So when it doesn't give you the expectation or the results you thought you were going to get by watching the video like Netflix, don't be discouraged or surprised when the result that you're hoping to get just simply by watching as a spectator. Like, I'm not entertaining you. I'm not an entertainer. I'm educating you. I'm 50 years old. I don't use a cane. Okay, I'm not decrepit, but I'm short on patience for people that are impatient. So you're going to take a lot of effort and time on your timing, how you're going to digest the information. But expect to spend a year. 1 year going through that content. If you do it like that, I promise you, you will know more about yourself that stood in the way of your success than you ever would have. And you will know how to read price without me. Without me pointing to something, explaining something, you will not be chained to me. And guess what that does? It gives you independence. There is no software program that you have to keep paying me to use. That's not the secret. That's a gimmick. That's a person's ability to make money and fleece you every single year, regardless of their free trial. You can have it right now because you're broke. But when you keep using it a little while longer, you better be paying me. And if you rely on that system or that software package to make you your money or help you with your decision making, you're a slave to that other guy. I'm not selling you anything. I'm giving you an independent thought process that takes you right into the marketplace that nobody will take you to this level of precision. Nobody. If you're listening and maybe you're from Goldman Sachs, JP Morgan, I would love for you to prove what I'm showing you here isn't true. Or if you want to come out here and give me your high-level, top-tier analysis, contrast it with mine, I'll walk as long as you want to walk with it, and we'll see who knows what. I can walk these markets like they're on a short leash, and I can come out here and be the arrogant jerk like I was in the 90s. And that would be like a TikTok version of ICT. I don't want to be like that, because that creates the wrong expectation. I want to come to you in this capacity where it's like, I live with this. I'm not surprised when the market does something. Like, oh my goodness, look at that. Look how it did that. Where'd that come from? I don't know what this thing's doing. Those thoughts are not my thoughts. I'm bored. This stuff is the same stuff. And the only entertainment I get out of this is seeing new students come to the realization that this is absolutely controlled. It's predictable. It's not noise. And it's consistent. And that's the reason why my slogan is what it is. Every week, every day, and it won't stop. The algorithm's not going to stop until the markets are no longer there. That's when it stops. There's so much more to this than you don't even realize. This is just the scratch of the surface. That's it. It goes much deeper than this. But this was the language I had to create so that way it could be made available to John Q. Public. Jane Doe, John Doe, the average person. And I can speak freely in this language that I had created. But you're welcome to doubt it. You're welcome to have all these conjectures about why I do things, why I don't do things, why I teach the way I teach, and why I won't do what you want me to do. You don't own me. My paid student group doesn't own me. I am my own individual person. And the choices I make, I have to live with them. And I've been very, very patient with the individuals that took advantage of the content that I was creating in a private group. And this is my way of telling them, I promised you if you kept doing it, I would do this for free. And those individuals that paid and went through the core content and lessons and lectures real time with me in paid group, you had what you paid for. You watched me call it live. You watched me outline it. I taught you. I gave you the lessons. I even told you to download these videos every single day. When you got new ones, before you watch them, download them. So that way you save them to a external hard drive. So that way you have it for your children. Pass it down. Most of them didn't listen. So when I discontinued the videos in the private group, they weren't prepared for that. Even though I told them for a year, do that. Get ready. I'm not going to keep the videos up. Lifetime access is you downloading them. I'm giving you my permission to take the videos and download them. So for those individuals that didn't do that, you're going to have these videos inaccessible on YouTube. You had the experience of being with me every single day. Every single day. When the original group signed up, they were only going to get Wednesday and Friday videos. That's it. That's it. That's all they were going to get. And in 8 lessons each month. That's all mentorship was. And it morphed into every day. And it became so much in terms of videos, it bogged down a lot of the students. And it's like, this is too much. I can't even keep up with this content. Well, that's what it's like when you're drinking from a fire hose. I got 3 decades doing this. And it's not your mom and pop's retail concepts. It's stuff that's very, very technical. It takes a lot of, study. And the average person isn't going to want to put this much work into it. They don't want to be a freak. They just want to make money. They just want to make a little bit of money, something simple. I've already given that to you on this YouTube channel in the mentorship for 2022. That free mentorship, that is the easiest way for me to sit down and say, here's how I know how to train you to look for a setup that repeats every week. It's up to you to subscribe whether or not that fits you. But in my opinion, out of all the things I taught in private group lectures, this was how any one of my students could have said, okay, he taught a PD array in the form of a fair value gap. I understand premium discount. I understand order flow. I understand market structure. I understand seasonal tendencies. I understand how the PD array matrix points to where the next pool of liquidity or imbalance needs to be redelivered to. So how am I going to formulate a model that's simple, easy, not requiring a lot of mental acrobatics to follow, and it's easy to spot? They could have done that with the breaker pattern of mine instead of a fair value gap. But the fair value gap, to me, I think is a visual piece of candy that's laying in your chart that you've never noticed before. Isn't it fun looking at, like, I've looked at these charts, I've never saw that before, right? It's always there. When I discovered this aspect of price action, I literally went back to the 1960s and 70s, those charts, before I was even alive. I was born in 1972. And I saw how price was doing these very same things. I'm like, what the heck? This stuff is, like, it's always there, but you're not taught to see it. So if you're not looking for it, well, it's invisible to the untrained eye. To the uninitiated, it's non-existent. It's made up. It's a fraud. It's a scam. It's a lie. But it's not. It's just simply you don't know what you're looking for. But once your eye has been trained and you know what you're looking for, the logic of why you should be looking for it and considering it anyway, then suddenly these charts look totally different. Absolutely different. One of the benefits of keeping a journal, I know I keep saying I'm going to close this video, but this is how it's like when I haven't been around to talk a little bit. If you go back through your journal, if you haven't kept one, you really don't have the benefit of doing this. But for those that have a journal and you journal screenshots of your trade, why you took the trade, what was the reasons for you to go in and look for the setup to pan out the way you thought it was likely to. When you fail, or if you had failures and you've lost real money or you had a losing trade with a demo, and now you've learned how to do what I've taught for free in this mentorship on YouTube, you'll see that fair value gap right there. And your trade won't be anywhere near it. And many times you're going to be doing something opposite to what I've taught in this mentorship. That, to me, is one of the coolest things to see people transition from, I don't know why I'm losing and I don't know why I can't make money, to, wow, I can see why I was losing and now I understand why I'm making money. I understand why I'm right now. And I'm not upset when I'm wrong. You see the difference there? That's a paradigm shift. That's a circumstance that you really can't appreciate or understand until it happens to you. When you have that epiphany, that moment of astonishment where, wow, I don't need to trade every day. And I just need to wait for the right conditions. And when they occur, and these things formulate a repeating phenomenon that I've covered in the mentorship, the fair value gap, the whole business, it's easy. You know what you're looking for. And if it's not there, guess what you're not doing? You're not trading. You're not taking on risk. But if you take a trade and you take the risk and you take a loss, it doesn't mean it's broken. It just means that you did something wrong and just take the next setup. So hopefully you found this one insightful and inspiring, and I will talk to you again, Lord willing, on August 22nd. Until then, be safe.